There's one question we get asked a lot when it comes to real estate in Germany.
Hey Axel, when is the German real estate bubble gonna burst?
I mean, we've all seen real estate prices have been going through the roof, and we see news headlines like these all the time. So of course everybody believes the German real estate market is a bubble with clickbait headlines that just try to make you panic. But the question that nobody seems to ask is, why did real estate prices in Germany increase so much over the last couple of years? So today we will let facts and reason speak over assumptions and emotions. Let us look objectively at some pros why the German real estate market could be a bubble, and some cons why it is not a bubble. Yet. So you can make up your mind if this is the right time for you to buy a property here in Germany or not.
Perfinex. Personal Finance for Expats.
What's up everyone? Welcome to a new real estate video from Perfinex, the #1 English speaking and independent financial planner in Germany. Today with the third video of our Real Estate in Germany series. If you're now like, what? Real Estate in Germany series? Then you might want to check real estate video #1 and 2. Link to both videos is in the description. The purpose of step 1 of this Real Estate in Germany series is to help you make the decision if you want to buy a property in Germany or not. And the major fact that will influence this decision is, of course, the timing. Is it a good time to buy a property in Germany right now? I kind of gave you my expert opinion on that in the last video, and it looked like this. In all honesty though, nobody knows the future. Not even me. Of course I have a reasonable opinion on things, but before we come to my personal opinion, let's look at some pro-bubble and con-bubble arguments first. You should form your own opinion on things and not just buy or not buy a property simply because I say so. Or somebody else says so. Alright, let's start with the most obvious pro-bubble argument first. Real estate prices are so insanely high already and continue to rise. Of course people and experts get skeptical when prices increase and increase and increase in a very short amount of time. And since the housing bubble bursted in the US in 2008, German real estate knew only one way: up. Just look at the German index of house prices. Looks almost like exponential growth. So this chart makes me only want to say one thing. Congrats to everybody who bought a house in Germany already. Looking back at it, it was an amazing decision. And the question on everyone's mind is, how far can this go? How much can real estate prices in Germany continue to increase before they detach themselves from all reasonable valuation? We've seen the return on rents decrease steadily over time because real estate prices have risen faster than rents, especially in the big cities like Frankfurt or Munich. And if prices are too high, there's only one way they can go: down again. Second pro-bubble argument comes from Swiss bank UBS that publishes a global real estate bubble index every year. Their latest study is linked down below in case you want to take a look at it yourself. In English, you're welcome. If you look at the key results of their study and the world map with the cities with the highest real estate bubble risk, you'll see that Frankfurt is #2 worldwide with a score of 2.26. And Munich is #1 with a score of 2.35, which is actually not that great. Just as a reference what these scores mean, 0 would be the fair real estate value according to UBS. And when you look at the historical data of those two cities, you can actually see that the real estate bubble risk for Frankfurt and Munich increased year over year. What I really like about this UBS Global Real Estate Bubble Index is that UBS is not just looking at real estate itself, but also at the setting around it. Like this graphic. It's not a secret that the same amount of money can have a different value in different places of this world. And this chart is comparing real estate prices with salaries in the respective city. So even though Munich and Frankfurt have the highest bubble risk, real estate prices are not that detached from salaries as they are in Hong Kong or Paris. It feels really ironic to say that real estate is still affordable in Munich, but at least it is if you compare it with real estate in Hong Kong. And lastly, from the UBS Global Real Estate Bubble Index, this chart that compares the price to rent ratio. which is a pretty popular indicator to see if real estate prices are fairly valued or in a bubble. And finally, Munich is number 1 again. Just in case you're wondering, I know it's not good that Munich is number 1 worldwide. In this city list, only in Chicago it is clear that buying real estate is better than renting real estate. From 16 to 20, we're talking about a moderate price to rent ratio, where buying real estate is a little more expensive than renting real estate. And everything above 21 is a high price to rent ratio, meaning buying a property is too costly and most people will decide to rent. And Munich is almost twice that high. So on the downside, real estate prices are insanely high. On the positive, we have a strong demand for rental properties. 2 things on that note. First, there are many more factors in the buying versus renting discussion, so you might want to check out this video. And second, be extremely careful when someone offers you a property with a 4%, 6%, 8% return on rent in the big German cities. Sometimes you guys send us properties in Munich, Frankfurt, Hamburg, Berlin with an 8% return just on rental income alone, asking us what we think. What am I supposed to think about this? Just ask yourself, why are you getting a return that is 4 times the market return? Maybe you found the best deal in the world, maybe, but very unlikely, because why would anybody sell a property that returns 4 times as much as all other properties around it? Which means he is selling extremely undervalued. Or is it maybe, which I think is far more likely, that your 4 times market return are just pretty numbers on paper, but not in real life? So just don't get overexcited when something is too good to be true, and please don't be stupid with your hard-earned money. There are many more interesting findings in the UBS Global Real Estate Bubble Index, but let's call it quits for now, and come to the con bubble arguments. The UBS document is linked in the description in case you want to deep dive into the real estate bubble yourself. For the con bubble arguments, it's really 2 facts why real estate prices in Germany have been skyrocketing, and that these 2 facts are probably not gonna change anytime soon. And that's what a lot of people seem to be missing, the why question. Everybody looks at the prices, see that they increase, and then conclude it's a bubble. That's not how it works, guys. The question is, why? Number 1 is the fact that we all know and most of us hate. The European Central Bank started about 10 years ago to decrease our interest rate in the euro area. And for 5 years now, the interest rate is at 0. That's what most of you guys are complaining about. Understandably so, because inflation eats away the purchasing power of our money. Now, I cannot change the monetary policy of the European Central Bank yet, but I can help you find the savings accounts with the highest interest rate in Europe. And that's what we did a couple of weeks ago in this video. Last time I checked, you got 1.5% interest rate per year, which is a lot better than 0. Link to the video is in the description. How are 0% interest rate and real estate prices connected? Well, low interest rates make real estate more affordable. It's much cheaper to buy a property at 1% interest rate instead of a 4 or 5% interest rate. And when we don't get any return on a bank account anymore, we're looking for other ways to make a return. That's why stocks increased over the years, ETFs, crypto assets, watches, Lego, Pokemon cards, wine, basically everything increased tremendously in value. Investors are taking their money from 0% bank accounts that get killed by inflation and put it into real assets. And one of the most prominent and most secure ways to invest your money seems to be real estate for many people. And since the monetary policy of the European Central Bank is probably not going to change anytime soon, people will continue to invest in real assets. And real estate prices will benefit from that. As long as interest rates are low and you can get a real estate loan for under 1%, which is basically free money if you think about it, people will buy real estate. And interest rate is even tax deductible as real estate investor in Germany, which makes your real estate loan even more free. Good con bubble news from UBS at this point. There's no credit bubble outside, so it's not like people are lending money hands over fist because interest rates are so low, like they did before 2008. And second argument against the real estate bubble in Germany is the fact how every bubble bursts, always. Every time, the same. Every price is determined by supply and demand. If prices increase, demand decreases. Pretty straightforward economics at this point. That's what I teach my students in semester 1. So the more prices increase, the less people want to buy. And when prices reach astronomical heights, that's when nobody wants to buy anymore. And that's when every bubble bursts. Because the first guy who bought a long time ago is thinking, I made some good money. Maybe it's time to sell now. And that's when the chain reaction begins, the bubble bursts and prices plummet. So if we want to see if real estate in Germany is a bubble, we just have to look at the demand for real estate. It's really that easy. And this is the Germany map that shows us the demand for real estate provided by Prognos, an independent economic and research institute. All sources linked down below. We have our 400 regional property markets here, and the yellow ones are perfectly leveled between demand for properties and supply for properties, meaning a small growth. Because thanks to you expats, the German population is growing a little. Light gray means no growth, and dark gray means a declining demand for properties. So 42% of the regional property markets in Germany are flat or declining. The other 58, quick math, are growing. Yellow areas slightly with population growth. Orange real estate markets are a little dense already. Red markets are super tight. And the 7 dark red areas are the large cities with extremely high demand, where UBS says in their global real estate index that this is a bubble. And Prognos says that the high real estate prices come from the fact that we are just not building enough. They are estimating that we are building more than 100,000 flats too little every single year. And every single year that stays this way, the German real estate market will get tighter and tighter. And the map will get more and more red, at least in the popular regions. Just look at Munich. The city itself is dark red, the outer areas are red already, orange after that, and then yellow. It's the perfect example. Now if you follow that logic and agree that real estate in Germany is a profitable investment, but think it's too expensive for you, you might want to check out our 5 alternatives to investing in real estate that require very little money. And these 2 pro-bubble arguments and 2 con-bubble arguments bring us to my personal interpretation of things. Did real estate prices in Germany increase a lot over the years? Yeah. Are the top 10 cities in Germany too expensive to buy now? Yeah. Is the German real estate market a bubble now? To me, there is not one German real estate market. I mean, look at the map of Prognos. Colors are all over the place. All regions are different. Parts of Germany might be a little bubbly, okay, I'll give you that. But that doesn't mean there are absolutely no good deals in the B, C or D locations. There's still good options for investment properties available. Not on every corner anymore, but still good investments if you have a long-term investment horizon. Is it risky? Can real estate prices fall 5%? Or even 10%? If you don't want to take any risk, then you have to be content with a 0% interest rate right now. That's unfortunately the way the European Central Bank shaped our world right now. I myself am confident that the risk will be worth it and real estate in Germany will continue to rise in value over the long term. Especially the intelligent properties who are covered by a solid rent and a good management. How much will it rise? I don't know. Also doesn't matter. Because if you buy real estate in the professional way we discuss in this Real Estate in Germany series, it will be worth it. If you buy a random property off the internet with pretty numbers somebody has to use in order to sell you a property, it will definitely be not worth it. But if you watch this video up to this point, I know you're much smarter than that. Just don't listen to all the noise and the clickbait. Just buy a small unit that is well in your price range so you have a low financial commitment. And buy a property with a good risk to reward ratio. so you'll have a high chance for a reasonable return on your investment. And that's what this Real Estate in Germany series is all about, helping you towards your first successful real estate purchase here in Germany. So stay tuned to episode 4 when we debunk the top 5 myths of German real estate. And if you have any personal questions, feel free to reach out. We're here to help. Happy weekend, everybody.